Let me tell you guys, even though the stock market has come down a lot throughout the course of this year, a lot of stocks out there, in my opinion at least, are still overvalued. We got to break a lot of those stocks down in this video, but first, let me show you how much the stock market has actually come down just this year. We're talking in the past 9 to 10 months, as we still have a little bit left in 2022. So if you all find value, hit that like button. Let me know your thoughts in the comments down below, and do not forget to get your 15 stocks from Moo with a $100 deposit. Each of those could be up to $2,000. Just use that link down below, or go to stocksurfest.com/moo to get your free stocks. And that link, all those links, help out the channel. I appreciate you guys as always. So look at this. SPY in the beginning of this year, not even back in when was that? In what was it? December. It was at $479 a share. Now, just about 9-10 months later, it is at $385 a share. It is down about 20%. Officially in a bear market as of last week's, pretty bad day, or pretty bad week in the stock market. And we have Triple Q here, which, by the way, if you didn't know, Triple Q tracks the NASDAQ, SPY tracks the S&P 500. This was at 408 back in November, so not exactly in the beginning of the year, but it peaked at about 408, roughly. And now it is at $289. In other words, it is down not 20%, it is down 30%, guys. It is pretty, I don't want to say deep in a bear market, but it's not down 20%, which it is what technically is a bear market. It's down 30. It is down 30%. And who knows? Some people are saying, like Ray Dalio, for example, he thinks that, and I made a short about this earlier. If you guys didn't go see that, go check out that little short video. He thinks that the stock market could go down another 20%. And I think he's talking about the S&P, which means the NASDAQ could go down more than that, for all we know, if the Fed raises rates to 4.5%. So take it for what you will. Currently, this is down 30%. SPY's down 20%. And I still think, again, there's stocks out there that are a bit frothy still. Now, did a lot of the air come out of the bubble for a lot of these stocks? Absolutely. I mean, have you guys seen a stock like Adobe, for example? Let's pull that up. A stock like Adobe, a lot of the air has come out. It was at $700. Imagine buying, and I don't want to clown anybody if they did buy it at $700 or $650, whatever. But I mean, come on, that is extremely overvalued. Even when we were looking at it then, I was saying that it's so overvalued. It's so overvalued. I'm staying away. I love Adobe, but I don't want to buy the company. And now look at where it is. A lot of the air has come out, but even with Adobe, I've said it before, I don't want to talk about it in this video because I've talked about it a lot, but I think it could come down even lower. You know, you guys remember stocks like, what was it, Snowflake? The air came out of this one a lot. It was at 430. Now it's at 185. There's a bunch of these stocks that have come down, but they're still pretty overvalued in my humble opinion. And stocks like Nike, and we'll pull up some numbers here in a second, guys. Make sure you all stick on throughout this video and hit that like button, and make sure to subscribe as well. You might as well if you haven't done that already. Nike is down from $180. Now it's at $100 a share, guys. It is down 40%. And I believe it is not near a cheap price quite yet. Well, maybe it's near it. It's getting there, but it's still pretty overvalued. So let me hop over here to Yahoo Finance and talk a little bit about Nike and look at some numbers. And we'll talk about some more stocks, of course, as we keep progressing through this video. So Nike right now, again, it was at 180. Now it's at $105 a share. The market cap, think about it. It's $163 billion market cap right now. That puts it at the peak, $250 billion market cap. $275. Is Nike really worth that much? I don't know. It depends on who you're talking to. I don't think it was worth that much. Heck, I don't even think it's worth $163 billion, to be honest. I don't know. Maybe I'm wrong. The PE ratio right now, trailing 12 months, is a 27. I like to see that in the lower 20s, to be honest, especially, or ideally rather, in the teens. If this were to get down to like a 17, 18, 19 PE, that's where I'd think from a price to earnings ratio, it would be a pretty decent value, right? Pretty good value. The dividend yield right now is a 1.17%. Not too bad. I mean, they're not known for their dividend. It's kind of like the cherry on top, which I guess, it's good. Obviously, they're a profitable company. They pay, again, $1.22 in dividends. Well, I mean, I guess some companies borrow money to pay dividends, but in this case, I don't think Nike's doing that. I got to look at their cash flow statements, but whatever. They're most likely not doing that, but they're making $3.75 on the EPS, which is solid. And if I pull up their financials quickly, guys, we can see the company. It really hasn't grown a lot since 2019. Trailing 12-month revenue is about 46 billion roughly. And 2019, they did about 40 billion, 39, 40 billion. I mean, it is growing pretty decent, I'd say, but in the past 3 years, it's nothing to, to write home about. Let's just put it that way. It's really nothing to write home about, and I'm sure let's see their earnings here, guys. Let's see here. Yeah. Okay, net income has come up a little bit. It was about 4 billion in 2019, trailing 12 months, just about 6 billion. So that's coming up a little bit, but overall, guys, I would like to see Nike at a price that it's cheaper than where it is today. Let's just put it that way. And like I always say on the channel, price is what you pay, value is what you get. It's not always about buying a great company. You got to pay a good price for the company. And for me, for a company like Nike, which the growth is really slowing down, I don't want to pay a premium for it. I mean, 27 PE, just looking at that. And I think the S&P 500 PE right now is like a 20 or something. It's come down a lot. Maybe not a 20. I have to double check that. But I think Nike's expensive. Let's just put it that way. I think Nike's expensive looking at it from a price to earnings ratio perspective. And another one that I'm looking at here, which might, you guys might not agree with me, but I think Visa, even though it's come down a ton, let's see here. I'll pull up ThinkOrSwim very quickly. We'll look at Visa's chart, then we'll hop back and look at these numbers. I think Visa is still a little bit frothy. Visa was at, I think, the mid-200s. Yeah, mid-200s. It was at 252 back in July of 21. Now it's at 193. Look at that. It is only down 25%. Not that bad. It's actually holding up pretty decent here. And if you look at the lows from March 2020 when everything was crashing, everybody was panicking, Visa was at 134. Now, at that level, that's a great value. We're talking that's cheap. I mean, if you got Visa at $130, that's a pretty good value. But right now, we're not at $130. We're at $193. And sure, if it fell another 20%, 30%, we would be at $130, but who knows if that's even going to happen. So right now, I do believe Visa is a little frothy. I'll pull it up here on Safari. We'll take a look at this together, guys. Let's see. Right now, market cap's at $400 billion. That's a massive company. $400 billion. The yield, the dividend yield is under a 0.8%. Trailing 12-month earnings, or price to earnings ratio, rather, is at 28. So it's a bit high on the PE ratio, in my opinion. And let's see the financials. Are they growing? They're not really growing that. I mean, all right, well, let's see here. Trailing 12 months, $28 billion revenue. And then in 2018, 4 years ago, they did about $20.5 to $21 billion. So they're not growing outstandingly every single year, but they're still growing. But for me, especially with individual stocks in general, guys, I don't want to buy them. You got to realize what a margin of safety is. You don't want to buy individual stocks right when they're at fair value. Ideally, you'd want to buy them when they're completely out of favor and they're so cheap that it's built in a margin of safety in there. So if you're wrong, you don't lose as much money. You might even make a little bit of money if it doesn't really work out the way you think. But if you're just paying whatever, I mean, and there's no margin of safety and you're wrong, you're going to get your you-know-what handed to you, in other words, right? So for me, I'm looking at Visa like, okay, right now, you can make an argument that Visa's a decent buy, depending on who you're talking to. But for me, I'd want to see it cheaper. I'd want to see it in the 150s, 140s, 130s. That's where I'd make a case where it's cheap, there's a margin of safety built in, and it's a good time to buy. But for now, I think it's a little bit hot. And another one that I think is hot is Shopify. That might be controversial considering Shopify is down massively. If you guys look on the year-to-date chart, this was at where was it? 100. Let's look at the 1 year chart. It was at $160. Now it's at $30. And the peak, I think, was at about 150, $60. So it is down massively. And I think at a 40 billion market cap, 244 price to earnings, which I'm not really going to look at that too much for Shopify here, but it's a ridiculously high price to earnings ratio, but of course, as they become more profitable, stabilize as a business, that's going to come down massively. But right now, 40 billion market cap, no dividend, and I will look at the price to sales ratio. I was about to say shales. Price to sales ratio, which right now it is at, oops, that's not the right tab here. Hold on, guys. Give me a second. Price to sales ratio right now is an 8.5. All right, so it's pretty high, let's be honest. Trailing 12 months price to sales, even, especially, or despite the fact that it's down a lot, it's still a high price to sales ratio at 8.5. The stock's down 80%. The price to sales ratio is still 8.5. So if this were to come down to like a 2 or 3, that'd be way better for Shopify. And the thing is here with Shopify, guys, it's a growth company. There's a difference here between Shopify, Visa, and Nike. I think Shopify, you got to value it a bit differently because there's a lot of growth compared to Nike and Visa. I mean, look at this. 2018, Shopify did $1 billion in revenue. And you want to know what they did in the trailing 12 months? $5 billion. So they literally five-folded that, 5x that in just a couple of years. There's massive growth in this company, and the growth's going to continue. So depending on who you're talking to here, it's they're going to be valuing it differently. But for me, again, since I'm a little bit more conservative when it comes to individual stocks, I don't like just paying crazy prices, right? I'm going to be waiting for a little bit more of a drop. I'm going to want to build more of a margin of safety in on this one, guys, on Shopify. So with that being said, let's see how long we're in here. I don't want to be too long on this Saturday video. And if you guys are still here, I appreciate you all. Let me know in the comments. Say stuck till the end. I'm going to wrap the video up. Might as well. We're 12 minutes in. Wrap it up here. If you enjoyed it, hit that like button. Subscribe. Again, let me know if you stuck till the end. Check out my Patreon if you want all my real-time moves. That's linked right down below. And do not forget to also get your 15 stocks for Moomoo. Each of those could be up to $2,000 with a $100 deposit. And you could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. And with that being said, I'll catch you guys in the next video, which, by the way, I have a second channel now. Stocks Talks Money is what it's called. I linked a link down below. New video just came out today on that channel. Go watch it. I'll see you there. Peace out.